In just the next few minutes, I'm going to share with you my absolute favorite swing trading pattern of all time. Hi, my name is Sami. I'm a professional trader and director of education at T3 Live. Let me show you real quick what the pattern looks like. Here we go. First, before I show you the pattern, I have to tell you that there are only two types of gaps in existence. Professional igniting gaps, which start or ignite new trends. They are to be played with or in the same direction as the gap. So you want to play, if it's a gap up, you want to play it long. If it's a gap down, you want to play it short. And then the other type of gaps are called novice exhaustion gaps, which end or exhaust all trends. They are to be played against or in the opposite direction of the gap. So if it's a novice gap up, you would want to play it short. And if it's a novice gap down, you would want to fade it by playing it long. Let me show you some real charts so you know exactly what I'm talking about. First, if it's a professional gap up, it will always gap from the area of the 20 MA, which is the blue line that you see on the chart. Again, notice how the day before the stock gapped, it was trading at or near the 20 MA. That's number one. Number two, if it's a professional gap up, it will always gap to resistance or just above it, basically clearing resistance. Notice how it gapped to resistance, and then on the day of the gap, it cleared it. After that, you play it either on a base breakout. If it goes sideways, then you play it above the base, long. Or if it pulls back, then you play it once it clears the last bar's high. So down, 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 and then once it starts to go back up, then you play it as soon as it clears the prior bar's high. This is on the daily time frame because that's where you play swing trades on the daily chart. So notice gapped up, cleared resistance, and gave us a small little base. So the entry was above the base, stopped just under it. Okay, let's take a look. Gapped over 3-month base, over the 200 period moving average, which is the red line you see on the chart. Very, very powerful gap. And then pulled back. Again, you play it just above the last bar's high, stop under the pivot, and then bar by bar. You just manage it bar by bar. Cleared the base, gapped up, cleared the base, pulled back, and then bar by bar. You would have basically bought it here and gotten out of it up here at $46 or so. Cleared the base, long above the pivot, stop under the base, and then bar by bar. I'm showing you a lot of real life examples because I want you to see that this pattern works, and it doesn't work on just one or two examples. You can look at your own charts. If you trade gaps like I do, you'll see that it works on a vast percentage of them, on a high percentage of them. Gapped up to resistance from the 20 and the 200, so that confluence of moving averages, and then gave us a 1, 2, 3 entry. Okay? This gap also created the transition. Gapped from the 20, notice how the stock was transitioning higher, and then pulled back right to the rising 20. Entry above the last bar's high, stop below it, and look at that sweet move. From like $3.54 to $10. Above the 200, and then eventually, this was kind of hard to manage. If you managed it bar by bar, which is how I manage my swings, you would have gotten out of it here. Still was a winner, not a loser. Look at this. What a nice beauty. Nice, beautiful move. Gapped up here, popped, and then continued higher. And then gap downs are exactly the same. In fact, I like gap downs more because they have more shock value. Most people are long, not short. So when the stock gaps down, there are more trapped traders. Gapped under support, just under support from the 20, and then gave us a 1, and then 2, 3, a resting bar, and then a breakdown. Short. Okay, same exact pattern. Gap down, and then a 1, 2, 3, and then a short. Gap down, rallied a little bit, so this was a sell setup pattern, and then lower. Gapped under support, all of this support, and then a 1, 2, 3, short. Gapped here, both would have been okay to play. This was beautiful because it gapped just below the 200, the red line, and under support, and then gave us a 1, 2, 3, and then 4 entry, so a breakdown. 1, 2, 3, breakdown. 1, 2, 3, breakdown. You get the point, okay? I don't want to go over every single chart. Look at this beauty. Gapped under several months worth of basing, and then dropped. Same here. Look at that big, huge drop. These are all igniting gaps, okay? All igniting gaps. Beautiful, beautiful examples of recent plays that I personally took, and some of which a lot of members played as well. Exhaustion gaps, on the other hand, come after an extended move down, if it's an exhaustion gap down, or an extended move up if it's an exhaustion gap up. In this case, this was an exhaustion move down and then the stock gap down. On gap downs, on exhaustion gaps, you always get a big spike in volume, and then you play the move that forms afterwards. So you get the sell-off, the big sell-off, and then the big gap down. Notice the wide range bar, and notice the big volume. And then you got the 1, 2, 3, and then you play it above the last, those 2 doji bars, and then long. And then you go on vacation, because some of these can last, look at this, can last forever, almost. Look at this, sell-off, a gap down, big time volume bar, which means everybody that wants to get out is already out. Narrow range bar, you play it long above the narrow range bar's high, and look at that sweet move. Show me a strategy that performs like this, that gives you these kind of moves. Just show me. Type in the comment, if you would, if you'd like, a name of a pattern that gives you these kind of moves, explosive moves that can last for months, years to come. Look at this. Sometimes some of these patterns basically set the bottom for months or years to come. This is Tesla. Where's Tesla at today? $430. Okay? This is how it bottomed. After a novice gap to the 200 MA, notice the spike in volume, and then from there it went to $400. Look at this. Down, gap down. Always you get a spike in volume and a big red bar and then narrow range bar. And look at that move. Just look at this move. It's like a space rocket, right? Amazing. Gap down. Actually, could have been a short too here, but it gapped well below support. I like to short gaps that gap just under support, not too far below it. Sold off. Notice the volume and the narrow range bars, and then from the narrow range bar, and then from there, exploded. Okay, so there's more I can keep going, but we're already on slide number 70, I think. So, showed you kind of enough. I'm going to skip a few and wrap it up by saying thank you so much for watching today's video. I hope you enjoyed it, and if you did, please be sure to hit the like button. Leave a comment and let me know what your favorite pattern is. And if you'd like to participate in trades like these, or if you'd like to learn more about my services, check out the link in the description. Thanks so much. I'm Sami Abu Saad, Director of Education at T3 Live. Good trading, everybody.